Morning. Welcome to Mornings with Michael weekend update. We start out here with the Bitcoin. We saw that Bitcoin rallied. It had been down as low as 53,000 something. We'll just take a look at the 5-day. Yeah, right here it got down to 52,902. It's rallied a bit. And it is failing. Got a little over double top and it rolled over here. So that is our look there. Now let us go. The VIX rally didn't quite get to our target, but it is rallied. We think that'll get over there Friday or this next week. So let us go over to start our PowerPoint presentation with our word of the day. Word of the day is graminivorous, feeding on grass. Most of our farm animals are graminivorous and eat on the pasture. Here is our word of the day, and here we move on. This is our big cap tech. As you can see, we got a big bearish Harami, and it covers a number of days all in one. So that is kind of ominous sign. This is NVIDIA, Microsoft, Apple, Facebook, Meta, Google, Berkshire Hathaway, Eli Lilly, Amazon, JP Morgan, Broadcom. So that is where we are on that status. I'm just going to bring up my notes for our targets. So this is Dow Jones. We had a little bit of a divergence. This is the only index that hit new highs. As you can see, it hit new highs over here and now is sold off. So our target on Dow Jones is still $400.52. Moving on, go right back here. Got this big gap over here. We think it's still going to fill that. As you can see, the stochastics are heading down, and so are the commodity channel index. We got a higher volume in selling over here. So those are some of the reasons it all looks on a bearish case or selling off. So this is IWM, small capitalization stocks. We got higher volume on the selling. I think this is going to go to 206.47. It looks like it may be bottoming here on the stochastics. So it's possibility that this is going to bounce sooner than later. And this CCI channel index, commodity channel index, looks like it's getting ready to bounce as well as it gets down to low levels. So that is kind of where we are there. Let's move on to the NASDAQ. The NASDAQ target on that is 443.81. So it looks like it's kind of filled this gap right here. So we think it may head down a little bit. The negatives are we got a big bearish candle right here. Bearish engulfing, engulfs more than 1 day of price action. And then we got a higher volume on the selling. The one positive sign for NASDAQ is it's a pretty big gap from the moving average and where the price is. Another positive, it looks like is angling in the stochastics, and we'll just see if it's hit bottom on the commodity channel index. So this is the S&P 500, much like the NASDAQ, a big bearish engulfing candle here. Has filled this gap over here, but we got another gap down here. Think it has potential to fill that gap there. Got a higher volume on the selling. Positive is it looks like we got a bend on the stochastics right here. And it's still going down on the commodity channel index. So it's not as far down from the moving average as the NASDAQ. So we think it still could go down some more. And our price level on the S&P 500 is 536.81. And here is a VIX hit pretty close to hitting our target of 2388. So we're going to move up the target on the fact that we think S&P is going to go down to 2688. So interesting that this day over here, usually when the VIX goes down, the S&P 500 goes up, but both the S&P and the VIX went down on this day. But you don't get that too often, but that is the story there. Let's move on. This article came out. Interesting, the timing on some of these things. You got to look at the reverse of what people are propelling in magazines. When they get to these things in the magazines, it's usually the totally opposite, where it says Americans are really, really bullish in stocks. Individuals are taking a peek at their 401ks and rejoicing. Just when you see this, the opposite is often true. And here we go. Just following that article, the S&P 500 down 4.02%, and this didn't even include Friday. And the NASDAQ down 5.45% are both on pace for the worst starts to September in the first 4 trading days since 2001. Well, after Friday, it became the worst start of September in over 40 years. So, yeah, that article was kind of timed, so to speak. So here, interesting, taking a look at leveraged longs. When things really jump up quickly in price, you can make money on these, but over the long term, you can see that it does not perform as the stock or index does. What is a leverage long? Generally 2 times or 3 times what the index or equity that it is following. So this is something that you, if you think triple hedged on a particular index or stock is a way to go, you may want to rethink it. If it is jumping down or up in price, it'll work for a while. But if it kind of stagnates, then you may want to take your profits and run, so to speak. Fed Governor Waller backs interest rate cut at September meeting, open to a larger move. And what do you think this is coming from? Well, when you look at the non-farm payroll, it was a pretty huge miss. They were expecting 164,000, and it only came in at 142,000. So he's trying to put the Fed put to kind of back up the economy before it gets any worse. The danger of this is the 1970s big rate cut, and look at how inflation took off. We just had terrible inflation. We got a chart a little later to show how that worked. So that's the danger. So most people think they're only going to do a 1/4 point cut right now because of this potential danger. Haven't truly beaten inflation. Now this is the Great Martise on Twitter. It's shown this kind of overlay. This is the market. This is kind of the megaphone action, very similar action here. And this is the 2020 sell-off right here. And this is where we've gone. And this is what the Great Martise is saying could possibly happen. And take out these 2020 lows. This is 1929. Wasn't so bad, the crash, but what happened after the crash? Employment and a lot of problems just kind of stagnated as stagflation kind of hit in. And going back to higher inflation, this is what happened in the 70s, stagflation just hit in. What does stagflation means? It means inflation that just sticks around for way too long and really hurts people's pocketbooks. So this is a look at where the 2020 is. Few people are saying that possibility that to take out the 2020 lows. This Great Marquise is predicting could go all the way down to the 210 lows. So that'd be quite a retracement. And if it happens, it'll probably be a 4-year recession. And a 4-year recession would really hurt a lot of pocketbooks and people out there. So we hope that doesn't happen, but there is a potential for this. This is AJ Monty, somebody that we follow pretty closely, and we appreciate all he's done to educate investors, people out there. Most investors are not preparing for a crash. Bearish ETFs could help hedge against risk. During the annual conference of central bankers in Jackson Hole, said Jerome Powell noted that timing and place of future rate cuts would depend on incoming data. We'll continue to go over the data. Right now, the Fed funds stand between 5.25% and 5.5%, highest level in 23 years. So here we go. This was a catastrophic job opening labor trends. So they cratered to the lowest level since 2021 as data manipulation fails. So they've been saying that the jobs were more robust than they were actually were. They were off by 818 to 850,000 jobs. How do you miss by that much? Other than a little bit of manipulation to help the current administration keep their jobs. So this is kind of a look at the buying powers in the current administration. So it's pretty close to 20% increase in inflation, only a 15% increase in average weekly earnings, a 5% difference. For comparison, the previous administration was under 7.8% increase in the consumer price index. So here we go to, this is why credit card defaults are at record levels. People can no longer can't afford to cover everything with the salary that they're getting right now. So they're using the plastic. This is record levels here. And this was right around 2020, I believe, pullback, and then we've even surpassed that. So we got an 8% delinquency rate on credit card loans. Banks not even among the 100 largest in size by assets. So that's our PowerPoint presentation today. Let us go on to our chart. What has been holding up? We'll take a look at some of the stocks that are been doing the best under the current tough start to the month. Let's take a look at the dollar. Dollar is bouncing off of the 10-day moving average. It has pulled back here. Silver selling off again. We'll see if it 20 right around 23 we thought would pull back to. Gold it's pulling back a little bit to the 20-day, then it kind of bounced here. Copper a big sell-off under all the major moving average, under the 200. Here's the 50-day. This green line is the 20-day, and this little red line here is the 10-day moving average. Take a look at the major ETF for, this is uranium. We'll see if that's going to be undercut to become a double bottom. Let's kind of take a look what were the major companies that held up. just gonna move this up a little bit here. Some software names came out on Friday, did pretty well. This is a recent IPO, Samsara. This is GitLab. A little bit of pullback from the 200-day moving average, but they had 1,000% earnings break, so they gapped up. Let's see if it can hold this gap. Argonne, engineering, construction, telecommunication, and infrastructure services, huge gap up on earnings, up 26%. And Quanix building products. Looks like we got a double bottom here, has cleared the double bottom right over here, has filled this gap. We've got another gap up here. Let's see if it can continue up. Their earnings year over year quarter was down 25%, but must be greater than what people were expecting, as it's up 21%, almost 22% on the day. Had a little bit of a pullback from its high. Palantir has been a little bit of a volatile action, but it is holding steady at its 20-day moving average, considering what the rest of the market did. On Friday, you can just take a look at this is the S&P. Hit its lows, was down 1.68%, and the NASDAQ hit its lows as well. It was down 2.68%. So for Palantir, it is holding up pretty strong. We'll just have to wait and see if the NASDAQ, this is a cup with a handle. This is a handle pulling back. See if it gets to its 200-day moving average and holds. S&P 500, pretty similar, but that's a pretty strong undercut for it to be a handle. You don't want a handle that pulls back that much. What else? This is in the medical, also holding up pretty good. Sold off to the 10-day and then quickly bounced. Mercado Libre holding up pretty good. This is the Amazon of South America. It just holding up pretty good, pulled back to its 20-day and bounced. The food category, Cava Mediterranean Grill. We got this gap up here. We talked a lot about holding the bottom of the gap. Did sell this, got back into it. We're always looking to add some more shares, so we're just going to watch this closely. They have been just beating all the estimates and performing on an exceptional level. There's a couple other biotechs that seem to be doing well. We'll take a look at try to take a look at those later, but just go around, see the subcategories. Financials are pulling back to the 20-day. Communications really took a big nosedive here. Google really sold off here hard. Consumer discretionary fell. Tesla and Amazon are in this area. As you can see, Tesla, big category in this index, ETF. I'm gonna pause here for 1 second. I guess our internet is caught up with us. Amazon is pulling back as well. Biotech pulling back. Kind of compare this with the medical sector. This seems to be holding up, healthcare sector holding up a little better. Consumer staples holding up pretty well. Utilities pulling back to the 10-day moving average. Utilities, consumer, and healthcare tend to hold up the best in a downturn. Infrastructure pulling back to the 200-day. SMH really getting battered. Pulls below the 200-day moving average, and as we know, nothing good happens under the 200-day. So we'll see if this sells off below 200, creates a double bottom. Building materials under the 50-day. Insurance pulling back close to the 20-day. Banking, S&P banks pulling back close to the 50-day. Same on the regional banking. Chinese stocks under all the major moving average. Here's the 200-day right here, 50-day, and the 20-day. The 10-day, it's just on a long downtrend here. So home building holding up pretty well. It was, looks like it's up 0.10 for the day. And I think that's all we're gonna, well, I guess we can look at airline. Pulling back to the 50-day. Leisure falling as well. What are we doing? This is, put this on Monday, right over here. And then we get another nice move right over here. You can take a look at. This is triple hedged on the long side, just diving down. Here is the short side, much like on the NASDAQ, breaking out. This is the long side on the small caps. See if I can remember. I'm just going to pause and bring up. Then here's a short on the small caps. Was up close to 6% for the day. So very similarly to the NASDAQ and the S&P, was up big earlier in the week and held steady and then really jumped on Friday. So that's kind of what we're looking at. This has been a weekend update. We'll continue to watch the market, see how things perform. Kind of think it could be down again on Monday, and maybe look for a bearish bounce later in the week. And we will catch you then. This has been Mornings with Michael for information and educational purposes only. Thanks for joining us. Everybody have a great weekend, and we'll talk to you then.